My name is Bill Sirius, and I've been a real estate investor for over 32 years. Most of my properties are near the University of Oregon in Eugene and Oregon State University in Corvallis. While much of the market has taken a real beating in the last few years, campus rentals continue to perform very well, and they constitute the financial underpinnings of my company, Stewardship Properties. Our main office is in Eugene, where we have a dozen employees running our operations there. Beginning in 2005, I recruited and mentored a team of young 20-something investors who helped me flip over 200 houses in Portland, Salem, and Eugene, mostly foreclosures and short sales. Then about 2 years ago, my interest turned to the Midwest and to what I consider a prime emerging market that has bottomed out, Kansas City. I was seeing homes there sell for $25,000 that rented for $750 a month, and duplexes for $35,000 to $40,000 that rented for $500 for each side, and in decent areas. So together with two of my sons, Andrew and Philip, I opened a real estate investment and property management office there in January 2011. In Kansas City, we call ourselves 333 Rent, which brands us with our phone number so prospective tenants can easily remember who to call. In over 3 decades of real estate investment, we have made a lot of money, not just for our company, but also for those who have joined us as private lenders, well over 100 different individuals. Allow me to introduce you to the Midwest branch of Stewardship Properties.
So here we have the Kansas City Real Estate Brain Trust right in front of us.
Ever since I graduated from the U of O, I've been working at Stewardship Properties, mostly in Eugene and Salem, flipping houses and things of that nature.
And your younger brother, by about 3.5 years, followed you out here. That's Philip. Philip, tell us how you got here and what you're doing as part of the...
Well, I came out here in very late September of 2011. There was a spot for me to really take hold of the property management systems and to kind of manage the day-to-day operations of the business while Andrew focuses on all the acquisitions. So now I've kind of taken hold of that to try to maximize our returns on all of our investments, to make sure the money is coming in and we're getting the most amount of money that can come in, and to really have someone focus on that, to be tenacious about that, and not let that part slip is, we believe, very important to the operations here. A lot of people who do out-of-state investing don't focus on that part, and that's where they really get burned. So with me focusing on that and Andrew focusing on getting good buys, I think we can really maximize our potential out here.
Great. And the person who's helped us to do that the most, actually, is named Dan Thompson, and Dan is a broker.
Kansas City is broken down into, we have Wyandotte County, Johnson County, and Jackson County, which is the biggest of the counties, most populous, and the place where we've been focusing on investing. You're right on the Kansas-Missouri border. Here's Kansas, here's Missouri. The black line here represents the state line. Our downtown area is right in here, and the office, actually, where we're filming this right now, yeah, right there. All right. Kansas City kind of lies out as a set of rings. We have an A area right here, very small, and then it falls off to your C/D areas in here and in here. And then it gets better into your B areas and A areas as you go around. There's actually a highway called 435 that cloverleafs around the city, and as a general rule, there's obviously areas throughout any of these where you can find good stuff. But as a general rule, outside the 435 loop, gives you the best property, the safest property, the best return for the amount of money you're putting into it. So it's maybe 20 to 30 minutes from downtown to some of these areas. These areas wind up being fantastic rentals and very easy to fill and very safe and easy to maintain.
Yeah, we're mostly focusing on the south part of Kansas City, right about pretty much the Ruskin area, which is right about here. Delaware. And then Grandview and Raytown. These areas are the ones we're focused on the most. Ruskin is a bit cheaper. It's nice because every house there is virtually the same, and they're these are the ones that are like $25,000 all in that rent for $800. A little bit more risk, but it's not bad. There's not a lot of vacant properties. You don't see burnt out buildings and things like that like you do in some of these rougher areas. As we move into Raytown and Grandview, it gets a little bit more expensive. The rents go up a little bit, but typically the main key is that you're just getting, it's a little bit safer. There's a little bit less risk there. Furthermore, we like Grandview because there's a lot of development going in right here. There's the Casey Intermodal Transit Center, which is going to add approximately something like 5,000 jobs or something along those lines. It's a massive intermodal for trucks, basically their hub where they all go. Just north of that, like 3 blocks north of that, is the Honeywell plant. It's the nuclear components facility. That's going to add a similar number of jobs. Plus, they're working on both these highways, and there's a couple other smaller developments going on there as well. So there's a ton of development going on here. We're looking at something like 7,000 to 10,000 jobs being added to that area. This population in Grandview itself is only about 25,000. So if you take in, you usually can add about 1.5 times the number of these types of jobs coming in service jobs and support jobs. So you're looking at about 20,000 jobs being added in this area, Grandview, Belton, in the next year to 1 to 3 years probably, something like that. So this area should explode. So we're looking at buying a lot here. This area, aside by being cheap, this area was the Ruskin area. I'll go back to that. It suffered an extreme downturn when the crisis hit. Houses were selling $70,000 to $110,000. Now they're selling, depending on the condition, from 15 to 40.
Any assessment here, Dan?
In Belvedere, these houses are, on the low end. For the beat up ones, go anywhere from 10 to 12,000 all the way up. Probably your high end house in Ruskin or in Belvedere, probably only about 65 or 70. It's a great rental area. We are near the intermodal. They rent easy, they rent fast. Pretty comparable to most other areas, and it's relatively safe, so it's a good rental area.
You aren't the only ones looking at these kind of properties. There's other investors as well, so there is competition here, certainly in the marketplace, because the sense is that this is definitely an emerging market getting prepared to move ahead, move farther up appreciation. Our next neighborhood is much nicer. These homes are in $100,000 range easily, and this is the worst one on the block, of course, which is a good sign, good thing. What's your assessment here?
This house will need exterior paint.
What was your first clue?
This is a very good neighborhood. If you just look around the block, these are 100,000 plus houses. Quite desirable. This one is easily the ugliest block, and we're gonna go see. It's only a 3-1, but we think it has a garage in the back, and we're gonna go see how the inside is. Hopefully it's not a guest shop.
We can't get into this duplex, but this is a gentleman who's selling 2 of them that are very similar to this. And we bought one down the street that I'm going to show, and I'll have Andrew talk about it. Anyway, we'd like to buy them both. I think they're in the market for $50 each, but we'll probably make an offer more like in the 70s for both. And that we hope will get us some attention.
This is 6003 East 153rd Terrace. We bought it for about $32,000 and put I think about 6 into it. We rented each side out for $450. It's they're small units. They're about just shade under 700. Two bedrooms, but they have a washer and dryer in them. They're just small little nice units. They rent easily. We have another 4-plex down here, 1 bedrooms that rented in all 4 of them in less than a month. So they're nice and simple, cheap. But that's. This is Rick Tyner. He's our lead contractor. We just finished this project at 7725 East 51st Street. It was a small job. It was only about $1,400, but there are a couple complications because the bank that owned it didn't winterize it. I'll let you.
Yeah, what we look for when we first do this is we look at the foundation, and this one has a really good foundation to it. We always circle that because that's the first thing that you have to worry about, the foundation of the property. The gutters were pretty bad, so we cleaned the gutters out, and that gutters causes the wood rot, which we replaced all that. You know, drains are good. But like Andrew said, they didn't winterize it, and all the lines were broke, so we had to end up running PEX underneath the kitchen.
That's new plumbing for those who don't know PEX.
Yeah, new plumbing. Believe it or not, we did shampoo this carpet just as clean as we wanted to, and us been walking back and forth.
Might be worth shampooing one more time.
Yeah, we'll try to.
I think it's salvageable.
Yeah, it's salvageable. In here, you know, it's got Lazy Susan's, a nice little kitchen. You know, we had to replace all the pipes underneath there, which we did. The dishwasher, everything works.
So this is fairly typical. What do you think this property will rent for? What do you expect?
I think you can rent for $750.
Okay.
Easily. In this neighborhood, easily
You
$750.
might even be able to get $795.
Okay.
It's a nice house. I'd live in it.
Currently, our focus is on smaller properties, houses, duplexes, fourplexes. We make hundreds of offers, and when we buy, we do so quickly with cash. This situation gives us an opportunity to connect with lots of private lenders, much like yourself, who are looking for solid returns that far surpass CD and money market rates. The collateral for any money borrowed is a first trust deed against the property it is borrowed on. And oh, by the way, in 32 years, we have never missed a payment. In time, we will look for larger properties that provide additional opportunities and expectation for even greater returns. Please consider joining us to profit from this emerging real estate market that has great cash flow potential. Thanks for listening.